Hello and welcome to another weekly analysis video. My name is Enho. Today is Monday. We are at 8 p.m. just 10 minutes past 8 p.m. Eastern time, Eastern Standard Time, New York time, July 24th. So this is the last week of July, technically speaking. We still have July 31st week after this week, but generally speaking, this will be the last week of July. Now, let's get into it. But first thing first, just like to go over some household matter. Now, first thing is that I'm getting more active on Instagram, which is I think people all know what Instagram is, but those of you who don't know, it's just the social media photo sharing apps. But that's not the point. The point is that because of that, I actually received quite a lot of messages from Instagram, which I actually don't know you can direct message people. So because of that, there's some of the questions that I like to basically go over it and basically just to address some of the repeated questions. Now, a lot of people ask me if I what kind of services I offer, basically, or how can they learn trading, can they learn from me, things like that. So I think I never really go over or talk about that. So basically, as many of you know, I'm doing this weekly video completely free, and the reason there are two reasons actually. So first is I'm trying to first of all, this is very, very helpful for me personally to do this kind of video, because I feel like I learned a lot by teaching or speaking to myself. So, regardless of publish these videos or not, I still do it privately on my own. I still, write my trading plans, do my weekly analysis, regardless of putting on YouTube or not. So first thing is that this is very helpful for me as a trader, and that's why I'm doing it. Now, second thing is I would like to get more exposure. Exposure for what I don't really know yet, but just more exposure to basically show a more solid knowledge, track record, or just being more transparent as a trader, because I think that's one of the very important aspect of trading, is that especially if you want to be out there perhaps teaching or managing people's money in the future, I think you got to be really, really honest in this game and to the people that who follows you or who listen to you. So that's the main two reasons I'm doing this video. So that's why it's all free, and personally I'm not really offering any paid service at this point. Now the reason is because I am really focused on trading myself right now. So I am trader foremost, and everything else comes after. That's very important to know. So that's why I don't want to have any obligation. And once I start charging people, I feel like I do have the obligation to provide a really, really good videos or services on time. And often than not, that kind of interfere with my trading. So at least for 2017, for now, I'm not really planning to do any sort of mentorship or services or trade alert, things like that. I'm really just really enjoying doing these kind of weekly free videos. In 2018, we'll see what happened to my trading. As I mentioned, that's really my main focus. And even with this kind of video or social media, I am a very introvert person now, regardless of the exposure on the social media, things like that. I'm very, very introvert. And whenever I feel the external activity gets too much, whenever I feel that kind of interfere with me psychologically, I will shut it off. So that's one thing very important for me, to have this personal and private space. And honestly, once you get more popular basically on this kind of trading forum or community, it depend on the people, but for me, it does affect my psychology and trading psychology. Sometimes you feel like you have to live up to the expectation, and you basically create a lot of unnecessary stress for yourself. So that's why I will try to make a balance out of it, but I will always regards my trading as the priority. So that's two things to talk about for me personally. Now, people also ask where they can learn more about trading. Now, and they ask about my mentorship. Now, there's two really, really good mentors that I'm still with now, and they are actually both completely different traders. One is a fundamental trader. So if you really like to learn more about the fundamental trading, you can Google Jared Davis. So basically, just Google Jared Davis and you can see a lot of websites, his Twitter, YouTube, and then you can reach him. So he offers a wonderful education in terms of fundamental trading, if that's something you're interested to learn. The other person is Walter Peters. Remember to type Forex. So Walter Peters, you can go to fxj.com, YouTube, basically, or his Twitters. Or you can go to his forum. It's called Naked Forex Now, I think. NakedForexNow.com forums. So you can find these two mentors on Google very easily. And good thing is that Walter Peters is more of a technical trader, and also focus so much on the psychological aspect of trading. Now, the wonderful thing about these two traders is that they both have very good communities. So once you are with them, you not only have the access to them, you also get to know a lot of traders who learn from them. So basically, you have a huge networks of traders, and people are all wonderful there. I met a lot of great people because of these two mentors. So that's something just for the people who are watching or people who follow me from Instagram. That's just answer your question, that this is the two predominant mentors that I'm still with nowadays. And this is, again, something I want to emphasize, is that it doesn't matter who you learn from, but I'll be more than happy to always give you resources or direct you to good mentors. I have no affiliate, by the way, with these two mentors. And the reason I'm doing it, because there are just so much scam artists basically in this community or in this education business. And trading is already hard enough. Now we all get burned by the market. It's worse that you have to get burned by scam artists, by the scam educators. So there's really one thing I'm trying to avoid, trying to prevent new traders, is to make the same mistake that I made, because I was with a lot of bad educators, scam artists, when I first started, not only in Forex, but in stocks, in options and futures as well. So if there's one thing I can direct you or help you somehow, is please, at least find a qualified educator to learn. And third thing, let me just take my notes here. Okay, so that's pretty much it, the two things. Now, let's get into our weekly analysis. I will repeat about my trading style in every videos, because there are some new viewers, and I just want to quickly go over of exactly how I trade. So exactly how I trade, I'm a fundamental and technical trader. I trade in both ways. And the way I trade it, I like to give you an example of movies, because I was a filmmaking student. So I like to give you an example of movies. I trade the market. I take a look at the market in a microeconomic scale. So, think about it, it's like you're looking at a movie. Before you even watch the movie, you want to know the backstory of the movie. You want to know each characters and their characteristics. So, for example, you go into the movie, you already know what you're watching right now. Are you watching a comedy? Are you watching the action? And you already know the characters and the characteristic. Maybe you know Joe Black. Joe Black is a music teacher, and he's very impulsive. He is currently divorced, 2 sons, and he's having a very bad relationship with his neighbors. They get into fight all the time. So that's, when you go watch a movie, basically that's things you already know what's happening. And what does that have to do with the financial market? Same thing applies. Like when I go into the market, it's like I watching a movie. I already know, okay, we are looking at the market right now in these currencies, in different major currencies. For example, Euro. So what happened to Euro right now? Well, Euro right now is that European Central Bank is looking to reduce the quantitative easing program. That means that they're looking to, basically in very plain language, they're looking to stop buying the bonds. So they're looking to make money more expensive. They either stop buying the bond so that there are less supply of actual money, or they are going to raise the interest rate. So in hindsight, that means that they are going to make Euro become more expensive. In a way, that means that Euro will become more attractive for buyers to buy. So that's sort of the backstory of the market. Now I look at market in a weekly perspective. So I look at market as what happened last week and what is about to happen this week. And as I mentioned, you're looking at a currency like you're looking at a character. And each character have its characteristics. So each currency also has its personality. And that's something you want to have on back of your mind before you get into the market. That's something you want to research and study. But those things rarely change. And if they change, you will have to know. So those things, for example, if you look at ECB, the governors or the officials, most of them are quite dovish. So that's, I would say, it's a characteristic of Euro and the central banks of European. Is most of them are quite dovish. So that's a backstory you want to keep in your mind. And when you go to a movie, what happened is there's a story and a climax. So that's what I'm trading, basically, the story and the climax of the movie in a week. So I look at the key events for the week. You see there's German PMI, there's Euro PMI, there is FOMC interest rate decision on Wednesday. So things like this is what I'm looking to trade. This is a sort of the climax or the story or the plot of the movie, a plot of the currency. And then with the backstory I already have and the anticipated climax that is about to happen, I will come up with my scenario and trading ideas to have a probability of direction. And that's basically the fundamental way of trading. There's 3 ways you can trade it. You can trade into the events, you can trade at the events, or you can trade after the events. Now, I know it sounds maybe a little bit complicated. If you're completely new, that's fine. Just keep watching it, and you'll know more by experience and learnings. So once you have the backstory, the characteristic, and you know what is about to happen in this movie for this week, you can start writing your scenario, and then you can start generate trading ideas. That's all the fundamental side of trading. Then I will go to the actual chart and take a look at the price action and use some very simple technical analysis to find a good entry point, a good stop loss point, and a good profit point. So on hindsight, that's exactly my trading style week in and week out. It sounds very simple, but it's not easy. Again, simplicity is not easy. So the best way to learn, again, is just to follow through this kind of video, follow through the market fundamentally and technically, and then you get more grasp of how I trade it. So key events for this week. Again, this is something I focus on, and this is also how I manage my time. Because, for example, if I look at the calendar for this week, German PMI, Euro PMI are all important, but it's not the highlight. If just look at this week's, the highlight for me will be the CPI data from Australia, UK GDP, and US GDP and Canada GDP. Now, why do I not think FOMC interest rate decision is a highlight? Again, it's really depend on what had happened last week, what had already happened in the backstory of this film. So for me, this is not really a big event. It's pretty much going to be a non-event, I think. So basically, how I get these kind of key events, I go to Forex Live, and that's where you can see what exactly had happened. Okay, so let's get into each 8 currencies and talk about what happened last week. And also, just to mention, I also looking at the events for next week as well. So basically, I look at 2 weeks of events, and the reason is because sometimes I like to trade into a catalyst. I like to hold a trade over the weekend, and that's why I want to know exactly what is about to happen this week and what is about to happen next week. So I take a look at this and then write all my scenario into my trade plan. So for Australian dollar, so last week, the RBA monetary policy minute, it was viewed as a hawkish minute. Now, when you look at RBA monetary policy minutes, the best way to do is to, for me personally, is to stay out. The reason is because, first of all, I don't read English fast enough. This is not my native language. So for me to read it, understand it, interpret it well and correctly, and trade it, it's just too hard. So for me, I usually stay out, and that's perfectly fine. I understand fundamental trading is not about the speed, right? It's about to understanding the general direction and finding a good point. And I always mention that the less is more. The more patient you are, the better setup you might have in terms of trading. So last week, the RBA monetary policy minute, it was viewed as more hawkish. Now, how do I know? I like the market tell me. So, if you take a look at Aussie, last week, once, for example, we took an Aussie dollar. When the monetary policy minute comes out, we have a sort of uptrend movement. Let me go to last week. So monetary policy minute was coming out on July 17th. So we go into the candle. This is 4 hour, by the way. I think that's the candle. Okay, so it actually shoots up. Of course, we also have the dollar weakness to help Australian dollar. So basically, the market interpreted this event as a very, very positive thing for Australian dollar. That's something you need to know. Also, the employment data. Now, in the employment data, if you take a look at it, is actually a negative number, right? Where is it? Right here. So we had it on July 19th. It was actually negative because the unemployment rate, it was same, but the employment change was lower than expected. The expected number was 14.4 thousand, and last one was 38. So quite of the reduction. However, you have to understand whenever you're looking at employment data, there are 2 employments, part-time and full-time. So when you look at Forex Live, you don't really have a part-time or full-time category. So that's why I would recommend you, if you are a new trader or if you are new to fundamental style of trading, as I mentioned, there are 3 ways you can trade into. You can trade into this kind of catalyst, you can trade at the catalyst, or you can trade after the catalyst. I would not recommend you trade at the catalyst, which is also a lot of beginner trader loves to do. People love to go to free website like Forex Live, and they like to trade NFP. And what they do is that, they look at a single piece of data, and if the number is better than expected, they just jump in and buy. And that's why sometimes, for example, sometimes when NFP number is great, or even like this, the employment data, when people say, okay, let's try to trade the employment data, and it was worse than expected and worse than the previous, so they just went in and short Aussie. That's not the case to trade fundamentally, because to trade fundamentally, it's first of all, you have to understand the backstory. What exactly is the central bank looking at, or what is the market paying attention right now? And also is that a lot of these free websites, they don't really have a deep analysis or detail. So in this case, although the employment change on the headline is lower than the previous and lower than the expected, we actually have more full-time job added, and that means the lower number actually came from the part-time job, and the full-time job is always more solid for the economy than the part-time job. So people actually interpreted these events as a very positive event, although on the hindsight it is a lower number. So that's it. You have to understand, trading a fundamental catalyst, you need to have a completely big picture. So you have to understand what's exactly happening right now. What is the central bank looking at? The most obvious mistake people made is trading NFP. People love to trade NFP, and all they do most of the time is they're trying to buy when the non-farm payroll is higher than the previous and expected. And then whenever it does not work, they just say, "Oh, fundamental trading doesn't work," because it does not, act exactly to the data. It does not act exactly to the data is because don't get fooled by this color of data. The importance of the data is not decided, is not set in the stone. The importance of the data point, or which fundamental economic release is important or not, it really depend on the central banks, depend on the market. It's very fluid, it's very dynamic, and it changes through time. So for example, non-farm payroll right now, the market and the central bank is not paying attention to the job data anymore, because US already have a full employment. What people are paying attention is the average earning. So that means regardless of how good the employment change is, how good the unemployment rate, none of those are important. As long as the average earning is not going higher, US dollar is not going higher. So that is something you need to have this knowledge on back of your mind if you want to trade this kind of events. So that's why I just give you this concept. But also, as I mentioned, you can trade into the event. Most likely you buying the rumor and selling the fact. You can trade after the catalyst. But most likely you get into after the event, looking for a retracement level to get in. Or you can trade at the event if the number is a surprise. However, I would not recommend a new trader, whether you're new to the market or you're new to fundamental trading, I would not recommend you to trade in that way or jump into the data point. There are three things that is going against you if you are a new trader fundamentally. One is your experience. You might think that, okay, as soon as the data point is lower or higher, I have a chance to buy or sell. That's not the case, because sometimes you just don't have that experience to interpret this kind of data point fast enough. For example, when I started trading at the beginning, I always get confused because, let's go back to the non-farm payroll. Because you have a data point like non-farm payroll, means that, okay, the number I know, the higher the better. The higher the better. Average earning, the number, the higher the better. However, unemployment rate is the opposite. The lower, the better. So when you are looking at these three data points, which come out at 8:30 a.m. New York time, instantly, sometimes you get very nervous, and your brain simply do not have enough experience to differentiate it, because you're looking at the number and you think the higher the better. The higher the better. Boom, you have a very high unemployment rate, which means it's bad. It's bad for the economy. It's bad for US dollar. And that's sometimes you don't want to trade when you don't have a same direction of data points. sometimes you get confused. I certainly got confused when I first started and always enter the wrong trade. So if you're new and you like to jump into this kind of action, you actually have these things going against you. That's the first thing. Second thing is that if you are using Forex Factory or even other free service like investing.com, no matter how good it is, you are competing with people who are using Bloomberg Terminal, who are using routers. Those paid premium service, their release is on time. It's on time. That means if it's 8:30, it come out at 8:30 exact. So by the time you receive the data point, you are already 5 to 15 seconds late than a major players. That means you don't have the advantage of information as they do. So you're putting yourself in a pretty disadvantageous spot just because your information speed is not as fast as other professional trader. So by the time you jump in, people may be already profit taking, and that's why you are actually buying at high or selling at low. That's why it's second thing that going against you. Now the third thing that going against you is your brokerage speed, because if you are new, you pretty much don't have a good brokerage. And why I say it, because the execution of brokerage, sometimes all of those very, very high-end brokerage require a lot of minimum deposit, and a lot of new traders simply do not have that kind of capital. So that put them in a regular brokerage, which is fine, but they are not compatible or compete in order to compete in terms of the executions. So that's three things going against you if you like to trade at a catalyst. First thing is experience to interpret the data. Second thing is the information. And third thing is the speed of your brokerage and execution. So that's why I would not really recommend people to trade at the catalyst. Now, even myself don't like to trade at the catalyst. I really like to trade into an event. For me, it's more a well elaborated plan. And in fact, most of my trade I took last week or the week before that was all trade into the catalyst. Okay, so that's why it's something worthwhile to consider. And you can also trade after the catalyst, which is also something very, very nice to trade, especially if you have a full-time job. If you cannot be at your desk, it's a wonderful trade. Now, if you understand, most of the trade I took is all based on 4-hour chart. So it's completely doable even if you are not a full-time trader. So go back to our analysis. Australian dollar, as I mentioned, because of the RBA minute, and right now the commodity market, especially iron ore and copper, continue to pick up. And that combined with the central banks had pushed Aussie in a very high spot. Now the employment data was not really a big driver last week because most fundamental data from Australia are sort of flat at a point. But the people in the market is buying it because, first of all, the commodity had picked up. And that's very important. If you take a look at the copper futures, it's a steady uptrend for 4 hours right now. Iron ore was hugely dropped before all the way until June, mid of June. And that's why we saw a big sale into Aussie before basically last month. But this month, from last month, we actually picked up quite well. So iron ore and copper, even gold, are all in a pretty good spot. Especially iron ore is really the lifeline of Aussie economy. So this is something very important. On top of that, the Chinese data had also been in a quite steady spot. So all this combined with the already high interest rate of Aussie. Now, if you want to know the interest rate of each currency, go to Forex Factory and just scroll down. It's right here. Current bank rate. And you can see Aussie is the second highest one among the major currencies. So because of that, you have a natural buyer for carry trade. You have a speculator, and you also have the investors who are buying Australian dollar. That's why it's a quite strong currency, although fundamentally it's neutral. Now, this week, we'll see the CPI data, especially the trend mean CPI, which is something that RBA is watching closely. So this will be a good data point to trade. Now, personally, I'm looking to trade at the catalyst. Although I recommend you not to do it, you do it only if you have the experience, the information, and the speed of the brokerage. But don't get frustrated that if you don't have any of those, because when you trade at the catalyst, you only aiming for a scalping, at least for me. So this thing, I only really just trade 20, 30, or even 50 pips max. The reason I'm not trading into the events because I don't have a probability of what's gonna happen. So if I don't know what's gonna happen, I'm pretty much stay out. And I will tell you which kind of moment I will trade into the events. Actually, let me just give you like simple. Let me finish Aussie first. So I will see what happened to the CPI data. My game plan is this: as long as the CPI is okay, it doesn't have to be a positive number, but as long as it's still within the range, the range is the actual data previously. As long as we are around 0, 0.2, 0.4, 0.5, we are fine. Aussie is fine. And then after that, you have the RBA government speaks. So once all this event passed, I will have a clear direction of where Aussie is going. But my current bias is to buy it. And that's my game plan, is to wait for these risk events passed as long as it's fine. Now, the government, what they are trying to do is to talk down their currency. And the reason is because now the major countries all want, especially like Australia, rely heavily on export. So if the currency is too high, if the money is expensive, it hurts your trading business. So what they want to do is to try to talk down their currency. But the market, whether the market is buying that or not, that's something you need to understand. And personally, I think Aussie is in a very steady uptrend. So if I see any downtrend, I will actually like to buy at a retracement. But I will really need to see the CPI data is in line. So I want to first make sure that fundamentally they are okay. Then I will be able to buy Aussie versus a very weak currency, such as Aussie dollar or pound Aussie is something I'm also interested to sell. That's the plan for Aussie. Now let me give you Euro, because I can tell you how I traded last week and you will know exactly how you trade into the event. So Euro right now, last week we saw ECB rate decision, which was expected unchanged. And the current fundamental data or fundamental picture of Euro is also in a very steady recovery to the upside. However, Euro is a very interesting thing. Last week, the ECB came out on Wednesday, I think. Let's see. ECB came out on Thursday morning. So take a look at Euro. This is what happened when the ECB came out last week. Did you see this downtrend all the way until Thursday? It started picking up. So I actually bought at 1.15 here. Really pretty much, the very good low point for the week. How do I trade it? I trade into the event. Why? Because when you want to trade into events, you need to have a scenario that no matter what happened to the actual event, there is more probability for a currency pair to go to the same direction. I bought euro dollar for a very simple reason. First is that ECB had been quite hawkish, and this was comparing to their usual dovish stance. They were saying that they need to basically admitted that QE is working well, and at some point they need to basically reduce the quantitative easing program. And fundamentally, the data and the economy had picked up for Eurozone. From Germany, France, Italy, Spain, every major country in European are all doing pretty well. Few of the major risks we had in 2017 had all diminished. One is the French election, the Dutch election, the Greek debt crisis, the upcoming German election. All the geopolitical risks had diminished. And right now, there is very, very little risk to push euro down, geopolitically speaking, fundamentally speaking. On the other hand, for dollar, all the expectation or the excitement for 2017 or at the beginning of 2017. At the beginning of 2017, you have a pretty strong excitement from Donald Trump. People were thinking he is going to push a lot of fiscal policy that is going to overheat the economy. And now it's July, as many of you have known that it's pretty much a very struggle administration for him and for the White House at this point. Federal Reserve at the beginning of 2017 saying they are going to raise interest rates. So the market was highly anticipated and buying the US dollar because of that. What had happened is that they did raise the interest rate, fulfill the expectation, and that's why there is nothing else to look forward to. So I understand people or trader or investor are always looking into the future. So if there's nothing more to look forward into, then people are not going to keep buying. So if you want to say in a very simple statement is that right now there's a lot of expectation for euro because of the asset reduction, because of the possible interest rate raise, and because of the economy had picked up, the geopolitical risk had diminished. Where for dollar, we don't really have much to look forward to at this point. So when you have this kind of clear bias, both fundamentally and sentimentally, you can pretty much know there is a very clear direction for a pair. Okay, so that's the fundamental side of trading. Now, technically, how I enter it, well, very simple. All I do is looking at what happened in the price action, and you can tell this is a very, very nice higher high and lower higher high and lower high uptrend. You have up, down, up, down, up. So just to be clear, all right, just to be fair, we were here last week before the ECB. So this is the picture I have, right, last week. So I already know that we are in a higher high, lower high, higher high, lower high, another higher high. Now we are retracing. So for me, I have a very strong general direction. I have a very good price action in a chart. So I have a high probability for this pair to keep going higher. And then I have the events coming up from ECB. So what I expect is that no matter what ECB is going to say, they are going to have two reactions. If they become very hawkish, we're going to see euro dollar continue to go higher. That's scenario number one. Scenario number two is that if they become very dovish, the market is the market or was the market going to believe that? That's something I need to ask myself in every catalyst. It doesn't matter what is it. Sometimes it's a fundamental release, sometimes it's the central bank comment. Always ask myself is what is the market doing right now, and is market going to buy whatever the central bank or the data point shows? And the answer for me at that time is no, because I think if the ECB continue to become dovish, market is not going to buy it because there's no reason for ECB to be dovish. Market is going to interpret it, the dovish stance, as a way to talk down euro, because as mentioned, most countries do not want their currency to go too high because that's going to hurt their trading business, trading balance. So my hypothesis was that if the ECB is dovish, we're still going to see euro dollar going up. If the ECB is hawkish, we're also going to see euro dollar going up. So without even knowing what's going to happen in ECB, I placed a pending order which got filled before the events. And that's why I say trading into the events. And as you can see, what happened is Mario Draghi did give a dovish comment, and the market, as expected, they did not buy into that. So on the contrary, they sense that the ECB is trying to talk down their currency, that means the ECB knows the market or the economy is doing very well. And that's why we see euro dollar picked up. Now, this further helped by the investigation of US President Trump. And that's why we finished the week at a very high point. Basically a new high, I think, since let's see how high we are. I think, oh wow, 2016, maybe here. Okay, so this is 2015. Wow, so 2015 August. So we actually reached a high point since 2015 August. So that's my profitable trade. One example that I traded into the event. I am still holding this trade, partial position, and still looking to keep buying euro dollar. So let's give you an example to trade into the events like this. And that's basically the fundamental picture for euro. Now, this week, we don't really have any tier 1 data for me. So you need to watch out for the FOMC interest rate decision, because although I don't think it's going to do too much, but you never know since it's a central bank decision. However, any dollar strength will be a good point for me to buy euro dollar back at a good retracement level. That's my game plan for this week for euro. All right, so let's go back to second currency, CAD. So Canadian dollar, the backstory is that right now, because the Bank of Canada just raised interest rate, and on top of that, they have given out a very hawkish comment. Right now, the market has priced in a very high probability for further interest rate hike in October and the end of this year. So this is very significant, because if you look at 8 major currency right now, none of the country at the beginning of 2017 had any probability to raise interest rate except US. So everyone was saying that Federal Reserve is the only central bank that has the possibility to raise interest rate, and they did raise interest rate. Every other country was just talking about, reducing the QE program, or things are looking well but not there yet. However, all of a sudden, Bank of Canada joined the hiking cycle and really hiked the interest rate this month. That is a very significant. So that's why we saw Canadian dollar become a very, very strong currency at this point. Now that alone is the main story. Okay, you can take a look at other data. You can say, okay, here and that. You can even say that oil market is in a downtrend. But understand, because of this surprise, it's a very, very strong sentiment right now for Canadian dollar. Now, fundamentally, how are we doing? We're not doing particularly well, but also not particularly bad. So the employment is one of the strongest points for CAD. However, the GDP inflation is more in a flat territory. If you look at the GDP for CAD last week, if you look at CPI for CAD last week, it's actually negative 0.1%. The previous one is 0.1%. It's actually reduced. It's actually dropped. If you look at the core retail sale, it's even worse. However, as I mentioned, fundamental data is just one side of the story, right? You want to look at the price action. So last week we have this really, really bad data point for CAD. So what happened to CAD? If you take a look at dollar CAD, we continue to drop. It means CAD continue to gain strength. What about Euro CAD? Euro CAD also not going anywhere particularly. So regardless of how strong the euro dollar is, euro does not have a strong bias over CAD. What about other currency? What about pound CAD? Still in the downtrend. Aussie CAD is much better. That just shows you that Aussie is also very strong. New Zealand CAD is still in the downtrend, and CAD yen is also in the uptrend. So that means most Canadian dollar pair does not got any effect from the negative data. And that just shows you how strong the market is right now to buying Canadian dollar, now, regardless of all the data point. And that's really the only or the most important evidence you need for Canadian dollar. It means that as long as Bank of Canada maintain their stance, market is largely going to brush off any single data point. Market is also going to brush off the oil market weakness because we did not have a good oil market for last week. We actually dropped from 47 all the way to 45. And now it's just up, down movement. But apparently that's not what the market or the trader is buying. Because of that, that's our game plan. The game plan is to buy Canadian dollar at a good retracement level. So this week we will have the GDP point for Canadian dollar. And the game plan is to buy at the events or buy after the events. So even if the GDP is negative, that will only give us a good opportunity to buy CAD at a good retracement level. Now what pair I'm looking at? First of all, I'm already in CAD yen at this pink line here. So this is for our chart. I'm already in CAD yen. We are in the sideways movement, but I am looking for this up resistance to be broken off. Dollar CAD is also something very attractive. However, we just don't have a good retracement level to get in. Pound CAD also is very good if we can have a good retracement at 1.65 or even 1.6450. USD CAD will also be something worthwhile to look at, but generally I'll stick with CAD yen, dollar CAD, or pound CAD. Swiss franc, I don't really have anything to update. For many of you already know, Swiss franc is a risk sentiment, a safe haven currency. Right now, it's a fundamentally weak currency because it is still in the deflationary territory. Sentimentally neutral because it acts like Japanese yen whenever we have a risk-off event, like maybe North Korea launch another nuclear missile. Then money will flow into a safe haven currency. However, I much prefer trading Japanese yen than Swiss franc for the very simple reason that Swiss franc, the central bank, is notorious for the interventions. So if you want to trade Swiss franc, I will only sell it. So I will look at very good risk on sentiment to sell Swiss franc, because whenever I sell Swiss franc, I can have a peace of mind knowing that the central bank is not going to intervene because they do want their currency to be cheap. However, if I'm buying Swiss franc, I will always be worried because we know that at a certain point, the central bank cannot tolerate a high currency value, so they will intervene to drop their currency. And since we're talking about Swiss franc, let's just jump to Japanese yen because it's exactly the same thing. Also fundamentally weak and sentimentally neutral, exactly same fundamental pictures or characteristic as Swiss franc. The only thing that's good about Japanese yen is that the Bank of Japan is not that notorious for intervention. They still do, but not as much or as sudden as Swiss franc. They also want their currency to be cheap, so that's something to keep in mind, that unless you have a very clear reason, plan or catalyst, or a very, very weak currency to trade with. Otherwise, I always like to sell Japanese yen or Swiss franc as a pair with a catalyst. The reason is because if I'm buying Swiss franc or Japanese yen, I'm also paying the interest rate. And if this is a swing trade, then it's just not something I particularly like to do unless we really have a very strong risk-off event. Then, of course, at that time, it will be a huge, pure speculative activities. So, Euro, I already talked about what I'm going to do. British pound. Now, British pound, again, it's very tricky currency right now. Last week, we have the CPI data, which missed the expectation. Now, to just give you a backstory right now. Right now, we have a very high inflation for UK. A very low, a very depreciated currency. And that's why we have the high inflation. So there's two ways you can have inflation. One is the actual economic activity. So if you have a strong employment, if you have a strong data point where it's exactly what's happening in US right now or in 2017. What's gonna happen is that most people have their jobs, and you have more of working people. So people's wages are getting higher because the employer cannot hire enough workers, so they have to basically pay more to hire a better worker. Now, when people have more salaries, they are going out to buy more stuff. Now, when they buy more stuff, they push the price up. Why? Because it's the employer simply cannot hire enough worker to increase the productivities. So they have no way but to raise the price. So basically, you have higher salary from people to have more money to spend. You have less products available in the market, and hence you have a higher price point for a product, means you have a higher inflation. That's a very good thing for the market as long as we don't overheat it. That's what's happening in US right now. So that's why people are thinking that US economy is a healthy economy right now. Now for UK, that's not the story. The UK inflation went so high because British pound dropped significantly after the Brexit last year. That had pushed the price to become very expensive for products. So that's why it's a very tricky question, because most of the time when the inflation is higher, central bank can raise interest rate. But right now, if the economy is not doing well and you raise interest rate, hence you make the money become more expensive, you're going to discourage the business activity, and that's going to hurt the economy even further. So their hands are tied. On the other hand, they have to address the question for the inflation. But on the other hand, they basically don't have any tools to do that. So the market had divided in two groups. One group think that regardless of the economy, they have to raise interest rate because they have to curb the inflation. The other group think that no way, they are not going to raise interest rate because they cannot do it. Basically, they're going to hurt the economy. And that's the backstory we have. So that's why last week the CPI data was the main event. Because if the CPI data continue to go higher, it emphasizes the situation that the UK does have an inflation problem, and the Bank of England is most likely have to address that issue. However, if the CPI data missed the expectation, which is what we had last week, that means the inflation is still under control and the Bank of England is not going to raise interest rate. So that's why last week when we saw the CPI data miss expectation, British pound dropped. Okay, British pound dropped at a certain point. Then Bank of England, Carney came out right away saying that, hey, regardless of this data, we still have the problem. So what he's trying to do is trying to talk up their currency. So the basic scenario is that Bank of England, their most important priority is to stabilize the market. So they do not want their currency to drop any further, because the drop was mainly from Brexit, a post-Brexit. Means that people are dumping the currency because they have lost confidence in these countries. So they don't want this to happen. So that's why they keep saying that, okay, we are going to raise interest rate. They're trying to talk out the currency. However, that's just the fundamental side of the story, right? As I keep mentioning, we need to look at the price action to see whether the market is buying into that story or not. So if you look at cable, so first of all, you have the drop when the CPI missed the data point. Then you have a slowly uptrend when Bank of England currently trying to talk up the currency. But I would say that looking at any dollar pair is not really accurate at this point, because dollar is very, very weak right now. So let's take a look at euro pound. We get more clear pictures. So if you look at euro pound, you see that euro still is way stronger than British pound. So let's take a look at other currency. Pound Aussie, you can see a downtrend for British pound. Pound New Zealand, another downtrend. Pound CAD. What about pound yen? Also a downtrend. What about pound Swiss? Also a downtrend. So what does that tell me is that market chose to pay attention to the CPI data instead of the Bank of England. That means it gives a very clear scenario that no matter what the Bank of England said from now on, any hawkish comment will most likely be brushed off as soon or as long as the fundamental data is not picking up. So that's a very good point to keep in mind, because if you look at this week, we don't really have much. We have a pretty much GDP. That means that market is really paying attention to data point, but not the GDP. We all know that GDP is okay for UK, right? It's actually doing quite well. Look at that. But market wants to know the inflation is under control. So one thing to know is that next week you are going to have a Bank of England event right here. So this is something I am going to trade into this event. So my game plan is that I don't think Bank of England is going to raise interest rate. And I think they are going to give a hawkish comment. Why? As I mentioned, they're trying to talk up their currency. But I also think the market is not buying into that. So the game plan is to sell British pound into the next week's Bank of England events versus other strong currencies such as Euro pound or pound Aussie. So that's the game plan. And for this week, if the GDP is good, I might trade it for intraday scalping, but it's really not something I'm looking forward. I'm really more excited to trade next week's Bank of England events. So as you can see, this is something you want to do to have a bigger perspective, to understand what is about to happen this week and next week, and find something that really has a high probability. Japanese yen, talk about it already. Now New Zealand is fundamentally neutral and sentimentally neutral. We really don't have much going on for New Zealand dollar right at this point. RBNZ has not come out to give any guidance. The market generally view New Zealand dollar as a very neutral currency. Now at this point, when everything is neutral, it means it's bullish for New Zealand. Why? Because if you look at the bank rate, New Zealand is the highest interest rate currency. That means if everything is neutral, we don't have any negative news or positive news for New Zealand dollar, that means New Zealand dollar will naturally have a carry trade buyers. People want to hold New Zealand dollar because it has the highest interest rate. So because of that, if you want to confirm this scenario, you look at other currency like New Zealand dollar. It's a very steady uptrend. New Zealand yen, New Zealand Swiss. It's in a sideways movement, but still coming from the previous uptrend. So not much people want to sell a high interest rate currency unless there's a catalyst to do so. Aussie New Zealand is the only thing that might drop, might still in an uptrend, but that's because the interest rate difference is very, very low. So if you look at Aussie Swiss, if you look at New Zealand Swiss, New Zealand yen, or even Euro New Zealand pound New Zealand, it's most likely going to be a winning situation for New Zealand. But because we don't have any catalyst, so I'm really not looking to trade New Zealand as a main event, only looking to pair it up with other currency pair. So for this week, don't really have anything happening, but also not looking to sell it. And I was at an Aussie New Zealand long trade, and I'm still in this trade. I got in almost at my break-even point right now, 1.0644. The reason is because although New Zealand is neutral, but Australian dollar has a stronger momentum right now due to the catalyst last week. And this week we also have the trimming CPI and CPI. So right now I'm setting my trade break even at here because this is a very clear swing point. So if we can hold this and continue to go higher, I will hold this trade and let it run. If not, I will get stopped out at a very small loss, about 0.1%. Now mind you, this was my original stop loss point. So That's just a sort of a game plan I'm really running. But besides from this, not really looking to sell or buy New Zealand dollar just because we don't have any catalyst to push it. Now, US dollar, as I mentioned, is a very, very weak currency. If you look at the DAX right here, we are really in a very clear downtrend. We also reached 93.8685 last week. Now, where did the US dollar weakness come from? That's something that a lot of people are puzzling about because they feel like, hey, how come the US dollar just start losing the strength? Isn't US still a very good economy? And isn't everything still looking well? You are absolutely correct. If you are an investor, US is still a strong economy. The US dollar is still worthwhile to buy. But understand, as a trader, it is a highly speculative business. So as soon as there is no event or nothing to hope for, people will not hold a currency. So to put a very simple statement, that US dollar is being dumped because of the previous expectation had all been fulfilled or disappointed. That's why people are selling US dollar right now. Now you will hear a lot of people say it's because the fundamental data is not doing well. I would certainly not say it, because if you look at the actual data point, it is still one of the strongest economic country right now in the world. Employment is still doing very well. PMI, manufacturing, retail, everything is actually doing very well. It's just not as well as previous data. So again, people are selling currency, or people are selling anything in a speculative way of doing things. So this is something you need to understand very clearly. We are in here as a trader, not an investor. So if things are not looking well, people will not hesitate to dump it. So that's why US dollar is in the downtrend. And if that's the case, a lot of people will come up with the question saying that, okay, then shouldn't we buy at the low right now? You could do that if you are an investor. But as a trader, I have one thing that I follow very strictly. That's, I don't want to catch a falling knife. This is something very important. People always say trend is your friend. Absolutely. You do not want to catch a falling knife. And if you want to know what it's like, you could do it literally, but I would not suggest you do it. You're going to hurt your hand, of course. So don't catch a falling knife. That's an idiom I follow. As a trader, I always follow the trend. So I look at the fundamental pictures, give me a general direction, but I always want to confirm with the price action, because at the end of the day, that's what matters. We are speculators. So that's why US dollar continues to go downtrend, and the game plan is still selling it, unless anything change fundamentally and the market and the trader decide to buy back the US dollar. Otherwise, I don't have any reason to buy it. I know it's very tempting, especially if you're looking at currency like dollar yen. A lot of people saying that, okay, if it dropped to 112, 111, or even 110, I'm going to buy at the wrong number. I used to do that, and there's nothing wrong with it, but just not my way of trading nowadays. I don't want to trade in this way. I don't like to catch a falling knife. So this week, the FOMC will be the main events for US. Although I don't expect too much, still pay attention to it. We might see a more clear insight whether to what's going to happen to the asset, to the balance sheet reductions. And if we can have a more clear picture, that might change the fundamental or sentimental direction of US dollar. But because I don't know, and the event is not here yet, so my general game plan is still to sell US dollar unless otherwise. Okay, so that's the game plan for US dollar. So that's pretty much it. As mentioned, this week, only thing that I'm looking to trade is tomorrow Australian CPI. And FOMC, I'm going to take a look. I'm not going to trade it. I'm probably going to have a more clear view afterward. And the CAD GDP, I'm looking to, if this is a negative number, that's perfect, because I can get in a CAD pair at a much better retracement level. the weekend, the manufacturing PMI is going to affect Australian dollar. So understand, if you are in Australian dollar trade, you're holding it, be careful for the Chinese data. Also understand, we are at the end of the month, which means that you will have the month-end inflow for euro. That means every month-end, a lot of business and companies are going to switch the money back to euro. And because euro is most country, especially in European zone, are holding the euro, and a lot of investment banks are holding the euro as a base currency. So it means you have a lot of buying into the euro. So on top of the already strong strength in euro, that means this week we're pretty much going to see more strength into euro. And if you look in a more bigger picture for next week, if you're holding any trade, the only thing I'm interested in, again, Australian dollar, you will have the cash rate and statement next week. So if you're holding any Aussie trade, you have to consider that. Then we will have the main events, which is what I'm looking at, or the UK Bank of England. This is the main event for next week, which is highly anticipated. Other than that, you have the regular non-farm payroll. You see, this is funny, right? Regular non-farm payroll. This is still a highly anticipated event. You can still trade it, but again, focus on the average earning. Now, that's pretty much it. I hope you... I'm sorry, this video seems to be very, very long, but since I'm only making one video once a week, so I think it's worthwhile to give you a much more detailed and clear explanations. So if you have any question, again, whether to anything I said, feel free to email me. I will try my best to email you back. I cannot really guarantee you, a timing matters, but I try my best. If you have any other questions, looking for anything I said previously, any questions in regards to this, need any directions, resources, feel free to ask me. I'm here to help. Okay, so hope you enjoyed this video, and let me know if you have any questions. All right, thanks for watching. I will see you soon. Have a good trading week. Thanks, guys. Bye.